Ladies and gentlemen, welcome to the Big Tech Frenzy. First up, guys, we have big news that happened yesterday that people started to pick up on that we actually didn't end up covering. It was Sunday, so right into it. All right. First up, we have essentially OpenAI and Johnny Ive's startup IO kind of deleting their relationship. So is there going to be an AI startup pendant or device that we keep alongside our phones and laptops, or is OpenAI potentially breaking that relationship off? I tried looking up the video myself on YouTube, could not find it. And it was a pretty popular video. I think it got millions of views. So the fact that we can't even find it anymore, and people are saying that the people that have the link are saying it goes directly to a quote unquote private video. Yeah, not very exciting there. So that was a little bit of interesting news to start off the tech world. And then this morning, we got some pretty interesting fintech news to excite the world as well. Fiserv, okay, one of the largest payment processors in the world, says, hey, we are actually starting our own stablecoin. If you guys were to guess the issuer, I'm sure you'd get it right. Of course, Paxos. Paxos is going to start this up. And they also said, hey, we are going to get in bed with PayPal as well. We want interoperability between Fiserv and PayPal USD. So not only is this good for Fiserv, but it also strengthens PayPal, which is also started by Paxos. Okay. So the world of stablecoins is heating up. All these different companies are picking, different or like their own crypto stable coins. Like we're seeing Walmart and Amazon look into it. Fiserv, PayPal are actually doing it. We're hearing a bunch of other companies wanting to actually get started. Who knows if they actually will? Like JP Morgan was probably the largest one that we ended up seeing. And Circle is essentially $300 a share. What did it close out at, actually? We need to see. I think the highest I saw it at today was $296. Let me see how far off I am here. Wow. 263. It hit a high of 298 today, however. That is quite the difference, ladies and gentlemen. Okay, probably a large sell-off during the Iran-US conflicts, which hopefully is calming down now. Obviously, we have a ceasefire on the table, but it looks like Israel was bombing Iran up until the very point of the actual ceasefire. So there's big talks that could potentially get canceled. I have not seen any news on that in the last 30 minutes, so that could have changed. But we almost hit $300 a share on Circle. Now we're sitting at about 263, 270 in after hours. But this continues to run higher and higher and higher. Remember, we started off at $31 a share on June 5th. So in a couple weeks, we could be looking at a 10x in less than a month, essentially. If we get to 3,100, or sorry, $310 a share. So yeah. Just left the depressing hymns discussion on Tevis's channel. Oh no, is it bad over there? Are they not bullish? So essentially, I guess there's been quite the breakup between hymns and obviously people who just left that are not going to want to talk about it again. But for the people who don't know, that Novo Nordisk is essentially claiming that hymns is being having deceptive practices that are illegal and all these things. I don't quite know. This is exactly why I don't follow the space. If I don't know the companies very well, I don't know what the big risks are. Did anyone have that priced into the book that Novo Nordisk would essentially call out hymns for deceptive practices and that, they're going to completely just dump the stock? I mean, both Novo Nordisk and hymns took quite the hit today. Geez, it was absolutely crazy. But I'm not buying the dip. Maybe some people are. Some people are also considering this to be a wait and see type moment, because this could be a potential existential threat if they are doing something that potentially they shouldn't be doing. But I think Tevis said it well in his video that this will probably end out in some sort of lawsuit either way, in either direction. Nope, I'm waiting. Yeah. Yeah. I mean, if it gets really cheap, uh, you know, maybe I take some sort of position to help my friends. Maybe we just get to 100 shares or something and take advantage of those covered calls that people are doing there. But yeah. Spider-Man meme pointing fingers at each other. Big Pharma has so many skeletons. Well, that was my interpretation as well. Is that it's quite a heavily lobbied industry. Uh, you know, very ingrained. I just don't like the healthcare section or sector at all. And I mean, to some extent, as a stock, they probably print boatloads of cash and are protected by, you know, massive government like regulations that end up allowing them to make tons of money, and it's all baked into the insurances and everything. But honestly, uh things change, and I don't know the industry very well. I'm not part of it. I never wanted to touch it. So yeah. Him SoFi is going to rip. Him sucks. It's funny. You can't say that it sucks whenever it's going up, but they have one bad day, which is, unless you're like completely in the industry or are a shareholder of one of those businesses or an employee of one of those businesses, was probably a complete black swan event. But the second it starts falling, that company sucks. That's what people say. Eh? Well, that's exactly what we're here to talk about. Will Galileo Technologies transform SoFi into a stablecoin infrastructure play? Bullish if it does, big time. Now, to my understanding, Galileo is not looking to be a Paxos, right? They're not going to be helping with the actual setting up and doing what Circle does. But we do know that SoFi is working on some level of a stablecoin, okay, backed by US dollars, and that Galileo does want to be a very big part of this. Now, regardless if stablecoins replace Visa or not, they will be a big part of the payments like infrastructure game, and they still will need to be processed. And so that is an exciting part for Galileo as well, whether they're a debit card issuer that also looks at potentially like stablecoins in themselves. Great. It'll be sort of anti-Visa, anti-MasterCard, anti-Amex, but Galileo actually does seem perfectly placed here. Now, the reason why I titled the video "Is SoFi Ready for AI and Crypto" is because it really does feel like these are by far. Now, we've already known this for some time, but it just continues to heat up, and we're proving that this is a very, very big deal. That like AI and crypto will be the next two largest charges across all of fintech. Now, whenever I say AI, I mean mainly for whether you want to consider that underwriting for Upstart, and I'm aware that Anthony Noto said, hey, he kind of chuckles at every single time that people say artificial intelligence for underwriting, and that it's more of just a numerat, like judging cash flows and then seeing how much they can actually take on, and then that is the equation. I don't know if that's essentially true for what Upstart's doing. I still think Upstart has a decent business and they could crack a code, essentially looking at people in a different way to try to judge if they can pay back a loan or not. And then on the other side, personalization, which I actually do think will be the big part, right? Offering so many different values and services while also keeping it very simplistic. There's been some companies in the past that have failed because they've tried to continue to add on every new bell and whistle. But the truth is not everyone needs every bell and whistle. And so it just gets cluttered for the average user. However, if you can offer a multitude of products, if you can do what SoFi is, which is trying to be the one-stop shop, it's important to know what that customer is actually going to use. Okay. So the personalization of those products. And so I think artificial intelligence is going to play a big role in that. We're going to have to see from SoFi if they can do that. Now, we've known for some time, probably about 2 or so weeks, maybe 3 weeks, that they've been working on products in their Invest app to show what, bulls are saying about the company, what are bears saying about the company, using notifications as a way of showing what the news on if or on why the stock is falling or raising. And that was an amazing ad, right? But we found out who is actually powering this, over the weekend, essentially. So SoFi and Benzinga announced a new partnership to power the next generation of investment research. Okay. Benzinga, which is sort of a news outlet similar to Motley Fool, maybe even competes with Seeking Alpha, these types, which I'm actually using Seeking Alpha to look through this, is actually powering SoFi's what the bulls say, what the bears say, the push notifications, and all those things that we've liked over the last little bit. So offering analyst ratings, price targets, earnings, and why it's moving has been a nice partnership with Benzinga. Okay? So very excited on that. Hopefully they continue to push out more of these personalized AI sort of features of keeping people well informed on why their stocks are moving quite well. Benzinga headline, ticker symbol sold off today. Is it time to buy the dip? Yeah, I mean, so Benzinga is very similar to Seeking Alpha, right? Where the actual platform is made up of a bunch of authors who are on the platform. Like Benzinga's even reached out to me and said, hey, do you want to write for our platform? And I said, no. Not that I'm anti-Benzinga, I'm just anti-wanting to write, and I'd rather make videos. And they do a little bit of video content, same with Motley Fool and all those other guys, but it wasn't really a fit. So essentially, that's what you're seeing there. Those are individual creators that choose to have that style of title, not necessarily Benzinga trying to promote that, exact same format over and over and over. Those notifications have been very nice. I mean, that's literally one of the most important things in investing is knowing why a ticker is moving. And it's actually not, historically, it hasn't been very clear. You have to go looking for it sometimes. If they can get accurate and very quick on why a stock is actually moving, giving you press releases from, the White House or any other connected space that a news-based data aggregator could offer you, that's a pretty freaking good offering, especially if it's for free, which it is. Okay. Yes, rate cut might come in July. Well, let's talk about it because it's on my list of topics. There has now been, I think it's the second or the third member of the Fed committee that has come out and said, hey, if tariffs don't play a larger role in inflation, we're really going to have to consider cutting in the next meeting. And this has actually allowed not a majority percentage to look for an ease on rates, but a growing percentage and definitely much higher than the 3+% rate that was actually being suggested in June. Right. So 20+% right now. Obviously, we've seen in the past that this could fluctuate dramatically, and even extremely high rates of probability of a cut does not mean that we're actually going to see one. Okay. So still important to keep that in mind. This doesn't necessarily mean that it's, once we get past 50% that we get a rate cut, but important to watch the Fed tools and see what the market is putting the probabilities at. So very, very interesting there. I pray for a rate cut. I pray for a rate cut. SoFi will do so well in a rate cut. It'll be crazy. Is SoFi dip coming given the fact that it's overbought? Yeah, I mean, that sounds like kind of leading the witness a little bit. I don't think so in terms of it being overbought. What the market will say in the short term, I've got no clue. Okay. I think that the people who do have a clue might be misleading some people. I hope that SoFi continues to run. I do not think that they're overbought. I think that the stock deserves a much higher premium. What we're going to see in 2025, and I don't actually think prediction on stocks can be a very volatile thing. I find that very hard to do. Predicting earnings on different businesses, pretty hard to do. Predicting earnings on SoFi, maybe one of the easiest jobs in the world. They are the most linear business you could ever find. It's almost insanely accurate in terms of how good the SoFi Weekly panel has gotten on predicting member growth, revenue, profits, margins, everything. And the only time that we essentially ever miss is always to the downside, right? So I'm very excited to see that over 2025, Anthony Noto and team have said that this will be a year of growth, and that we are once again projecting our expectations onto SoFi as being too conservative, and that they can potentially, hopefully, I mean, right now I have my estimate that in Q1 of 2026, they'll break 1 million new members per quarter. We haven't seen that yet, but yeah. The what do you call it? Interesting thing about members is that it's by far the most leading indicator of a successful business, especially for SoFi. Add on top of that products per member, add on top of that average revenue per member, add on top of that cost to serve those members. If all of those things are headed in the right direction, meaning CAC costs and margin on their revenue, well, margin on the revenue goes up, CAC costs go down, average revenue per user goes up, products per member goes up, more members goes up, but also the amount of new members goes up. I mean, that's as successful of a business as people could ask for, right? And I think everything in between is what people are saying, similarly to Google or something like this, like, oh, there's another company doing something better, and so Google is going to lose, right? They're going to lose search revenue, and so that means that the stock is going to go down. OpenAI is going to eat their lunch. Now, that's a very extreme example because OpenAI clearly, like so very clearly, offers a better product than what Google search is, right? Now, to say, does OpenAI offer a better product than Gemini? That's up for debate, right? In terms of who actually has the best model today, a lot of people would really say Google. I mean, the market's even betting on it. I think there's a 60% chance that the year ends with Google having the best model right now. Whenever you're talking about SoFi versus their competitors, it's nowhere near that big of an existential threat, and yet the market is placing them as if people are betting like they are the Google in this Google OpenAI situation. In reality, everyone puts them up against Robinhood. They don't even compete, okay? People have to realize that there's a mountain in front of them. The mountain is JP Morgan on top of Wells Fargo, on top of Citigroup, on top of Bank of America, on top of Truist, and every single regional and community bank and credit union and everything on top that amounts to trillions and trillions of dollars of US traditional banking. And people are talking about the little anthills on the side that make up for less than 2% of the overall assets under management, which is Robinhood and SoFi combined. And they're worried about how those anthills are fighting each other. When the real problem, or not the real problem, but the real take is who's going to become the next mountain. And they're both doing well. Everyone makes it seem like Robinhood's the only one that grows. Robinhood, and I say this as a Robinhood investor, as a SoFi investor, Robinhood has the potential to grow much faster than SoFi. It also has a very, very large potential to decrease in revenue. Okay, if crypto crashes, if we go back into a crypto winter, you are going to see year-over-year growth rates on Robinhood that are negative, or potentially. You never know what the actual market's doing. Maybe options skyrockets. They could save themselves. But SoFi has been extremely linear, and I don't think anyone in the market is expecting them to have a negative growth rate on revenue, essentially ever. I don't think anyone will ever expect them to be under double digits, at least for the foreseeable future. So that mountain is very much for the taking across two different businesses that have different styles. One with extreme volatility and great product design, and they're doing great. Robinhood's doing great. SoFi, on the other hand, is very methodical, doing everything potentially the hardest that you could do it, getting the bank charter, building everything in-house, not partnering a lot with businesses. They're trying to do everything vertically. And the revenue and market share that they take will be of the highest margin, because, like, for example, Robinhood got into mortgages, but they're also partnering with a company to offer those mortgages. Actually, they're partnering with a broker to offer those mortgages. So the broker takes some money, Robinhood takes some money, and then the customer gets their final product. SoFi offers a customer directly money. Which one do you think gets the better margin? If you're thinking too hard, it's so clearly SoFi. Okay, so and by the way, whenever you're talking about financial services as well, one of the largest, and I mean, the take rate on mortgages has been so, like people get very confused, but they are one of the most profitable products in the entire world in financial services. Okay, that's why every large bank is a massive mortgage originator. They make a ton of money. Same with credit cards, right? And SoFi has the ability to now essentially underwrite those loans, not just for refinancing, but also purchase loans as well, which two different strengths. They can do both of those. They will be able to offer those in terms of a loan platform business, so writing it for other asset managers and everything like this. Those will be massive businesses, massive. Okay, and if they can hold their underwriting standards and everything to a level that people had not thought before for SoFi, which has been clearly the case in personal loans and clearly the case in student loans, then the market will give them a premium for doing so. But like, I don't know. I think a lot of people really put a lot of emphasis into just the SoFi Invest products because those are the products that we touch directly. Now, I have about 8 more minutes and so many more topics. So let's get moving. Okay. 1, Shift4 is acquiring an Australian payments leader called SmartPay. Okay. They're acquiring this company for about $180 million. And they're actually a public company in Australia and New Zealand, and they're buying them for about a 46.5% premium. It's not going to be that complicated of sort of an investment to understand. Shift4 buys companies to do the exact same thing every time. So let's go through it. Okay. This SmartPay company is obviously, like I said, a public company, so we can see exactly how they're doing. All right. And we're going to go up and just take a quick peek. 1, they're a growing business, profitable. They've got cash. Great. They also have 48,000 terminals in the market and 35,000 merchants. And their website actually said more. So this could be the difference between fiscal year 2024 and where we are today. But I think they're around like 52,000 or 53,000 terminals or something like this. Anyway, on top of that, they do terminal rentals and most of these things. But what usually lacks with all of these types of businesses that Shift4 always acquires is that they do not do payments. They end up partnering with a company to do payments, and they take almost like a referral fee for offering that, right? What Shift4 is going to do is acquire this business, continue to offer terminals and support their merchants that are already there. They're probably going to keep SmartPay terminals alive and well. Maybe they might transition to their own SkyTab product, which is their own handheld devices and everything. But the main opportunity is for them to offer payments, okay? To become one of the largest payment like Shift4 really does their own payments. They do the full scale payment thing the same way that Stripe would, okay? So they could continue to acquire companies at really cheap rates that are growing, slap on payments, and then end up making 5x the revenue per terminal that's out there on the market. They've done this countless times over and over and over. It's just another one. This is Shift4 playbook at its finest. Jared Isaacman is back. The stock, I think, is still under $100 a share. I haven't checked in a few days. So yeah, that's another company that I hold in my portfolio, 93.55. Yeah. It's another one that I hold in my portfolio that I'm very, very comfortable holding right now. Beautiful business. Let's see what else. FICO. Okay, this is pretty cool. So the Fair Isaac Corporation, the business that's actually behind the underwriting of FICO, like a FICO score, is now going to be improving credit scores that incorporate buy now, pay later data. Okay, so whenever looking at someone's total debt, you're looking at their credit cards, potentially, other outstanding bills that they have, all of that sort of information that goes into a FICO score that could potentially understand if a person's going to pay you back or not, that hasn't historically priced in how much they actually have in buy now, pay later, which could be thousands and thousands of dollars that potentially a lender would have wanted to know about. So FICO is saying, hey, let's incorporate that. Let's make this more accurate models. Let's make sure that people don't have to build their own types of, credit models or understanding models. We can end up owning this. So very good from FICO. Cool company, but also great knowing that underwriting for companies like even SoFi, which talk about companies that do their own underwriting, they actually do, but that they could potentially improve their models over time with similar types of capabilities. Let's see here. SoFi's website for mortgages seems down. I mean, we could check that, but I'm sure that's not a big deal. I mean, they're not getting out of mortgages. I promise you that. It's been a massive success for them, especially recently. It's only gotten better. So there's not a chance that they get out of more. I mean, it's not even up for it would be like Visa getting out of payments. Like it's not going to happen. But you are right. Their mortgage thing on their website definitely seems down. Only for the home purchase one, a mortgage refinancing, cash out refinance, jumbo loans, all those ones seem to work. But the home purchase one, maybe it's a ton of volume. We can hope. Maybe they're updating the website right now. Hood will eat their revenue in loans. I think you mean in mortgage loans, and you couldn't be farther from the truth. Like truly. I think that like mortgages is one of the largest products in the financial industry. We're talking about trillions of dollars here, trillions. They're both going to do perfectly fine and probably won't even be able to address all of the demand if they end up seeing that high that one could disrupt another. It just wouldn't happen. SoFi lost their partner for mortgages. Yeah, that's the thing. They don't have a partner for mortgages. They are like Robinhood has a partner for mortgages. They could lose that partnership. And by the way, SoFi did lose their partnership for mortgages like 3 years ago. So then they decided to build their own. There's no more losing. It's fully integrated. They got out of their relationship with lower.com, which was their old mortgage partner, which is essentially what Sage Corporation was doing for Robinhood today. And now SoFi underwrites their own loans. They originate their own loans. They house that on their balance sheet. They sell those loans on their own. They acquired Wyndham Capital Mortgage for purchase abilities on mortgages for understanding that product. There's no partner to lose. So does SoFi hang on to their mortgages they underwrite, or do they sell a majority of them? They almost sell every single one. They sell the high majority of the loans that they end up getting. I think it's like 90+%. But that can change, right? Essentially, what they're doing is that they only have so much capital ratio, and they're so successful in personal loans that they would rather use that ratio for a much riskier, higher paying loan right now. If things were to change, obviously, in real time, they could start to house more mortgages on their books. Okay. they'll put mortgages on the loan platform soon. I think they'll start with student loans first. I think that there will be a massive industry for that. And then home loans will probably be last. Also, like they were saying that, like, I think 2% of SoFi's outstanding members that pull out a mortgage while being a SoFi member take it out with SoFi right now. They think that they can get that up to 15%. The change in originations on home loans is going to be massive. Massive. Tanner, what you need to take a look at this. How is the debt buying industry reacting to these fintech changes? What fintech changes exactly do you mean? Tyler, tell me what you're saying exactly. Are you just talking about stablecoin regulations? Or are you saying that just a shift in general market share going towards more fintechs? How many of the 11 million users that signed up got the $300 bonus and then never looked back? Well, there's not a real clear, like $300 bonus means that they're a direct deposit user. So they don't have to look back. They're a direct deposit user. They're fine with it. But really, SoFi is not like any massive 11-digit company, like $10+ billion. They're not idiots. So they're not going to offer $300 for multiple years over time if they're not getting a return on it. If they weren't getting a return, they would cut it off immediately. Okay. The fact that they continue to offer these products or continue to run loan or advertisements that roll continuously over and over, it's because it's working in spades. Like they're seeing massive results from it. And essentially, this is a pretty big standard across any single fintech, is that individuals that have direct deposit relationships or primary banking relationships with a business, they essentially 5, 6, 7, 8x their average revenue per user. Okay. You see that across, Nubank, Cash App, Robinhood, like across the board. If you're doing direct deposit relationships, Chime, that you're making a ton of money. Mitch just says, hello, sir. We have a show to do. I completely forgot. Ladies and gentlemen, thank you all so much for watching. If you guys want to see me right again, I have to go. I'm supposed to be live on another show on the Tech Bros Weekly. So I'll be live streaming that in 5 seconds. Thank you all so much for watching. Really do appreciate your time. Bye for now. Sorry, Amit.